Hey guys, Jared Wesley here of Live Traders, and it's that time of the week. It's Saturday, which means it's trade review time. I apologize I didn't get to do one last week because of the Super Bowl. I just got really busy, but we're back at it again this week. I've had a few requests to show all the trades that I took for this past week, not just this past week, but in several weeks in the past. And that's something I would like to do from time to time. So I've chosen this week as one of the weeks that I'm going to do that. Normally I review 2 or 3 trades, but you know, I can this week simply because I only took 10 trades this past week, and I'm going to review them briefly. On those trades though, guys, I've been talking a lot about what? The 84% rule, right? It's the big thing I've been talking about recently. Last week I put out a video on the 84% rule, so you should all know what it is. I will put a link up there in the corner in the description also, so that you guys can check out the video on the 84% rule if you haven't already done so. But nonetheless, this past week I took 10 total trades, guys. Three of them were able to be on the 84% rule. What that means is 3 of them fully stopped out, so I was able to get back in those trades. 2 of them ended up going 2-1, and 1 of them ended the day slightly down. It was Facebook. I'll show you that in a minute, guys. But all in all, I only took about 10 trades this week. Recently, that's been pretty normal. And one of the reasons I don't go over all of my trades for the week is some weeks I take 18, 20 trades, and it's just too many trades to go over in a 20-minute video. So what I've done this week, guys, is we're going to head to the computer in just a second, all right? But what I'm going to show you is every trade I took this week, okay? I think I ended up making about 7 or 8 R this week, which ended up being about $3,500 or $4,000 this week. The thing I want to get to you guys is this, okay? I'm a little tired of talking about it, but I think it's really important to discuss, all right? If you are going to start this business, if you want to be a great trader, okay, it's going to take time, it's going to take patience, it's going to take discipline, and guess what it's also going to take? Nobody wants to talk about it. It's going to take money. Money, M-O-N-E-Y, money. Stop this Google searching where you're seeing guys turn 500 into $1 million, and oh, if you have $2,000, I can show you how to turn it into $2 million. Guys, it takes money to be a trader. Guess what? It takes money to open any business in the world, period. All right, so if you're coming in with like $800 and you're like, I want to be a trader, you're not ready yet. I would say the minimum is $5,000 to $10,000, and even that's on the low side. What other business can you really start for $5 grand? Not that many. Okay, so people ask me all the time. I typically trade with a $50,000 to $100,000 account. It's always between that range. It's a sweet spot for me. I like that amount of money. I could trade with 20 times more than that, but for my style of trading, I like that level of account size, okay? But just get over all these people out there going, yeah, you know, I turned $500 into $1 million, but I'm gonna start over again. So if you had $1 million, like, yeah, I think I'll start back at 500 again, you know, because it's so easy to do. No, it's, guys, it's marketing hype, it's BS. So where I'm showing you in here, guys, is a standard retail account, $50,000 to $100,000 account where I risk about $500 per trade, give or take. Sometimes it's $450, sometimes it's $600, right around $500 per trade. Okay, and my goal is to make 1% per day. 1% per day. So at the end of the year, 250%, give or take, is my goal. 200 to 300%. Okay, that is realistic. That is doable. Stop this crap where people are like, I made 9,000% last year. You know what? Here's a side little story, guys, before I get into this, okay? About 10 years ago, 11 years ago, I had told somebody who's very successful, probably worth $600-700 million, this person was, okay? And I said, yeah, I made about 4,000% last year. And I'm thinking, oh, you know, I made 4,000% last year. First thing the guy asked me, he goes, how big was your account and how much money did you make? And I sat back and I was like, oh, it was about $2,200. I made about 50 or 60,000. He goes, oh, that's nice. Maybe I could pay my electric bill on that. And it got me to think he was right in that you can't scale 4,000%. If you had $1 million account, you're not going to make $40 million or whatever the number comes out to. Okay, does that make sense? You can't scale that. Okay, so your goal should be to build wealth. In the beginning, your goal is to make income, right? To increase your income. That's why you want to be a trader. But then what happens is you get to the law of diminishing returns to where your style of trading caps out. And then you have to start what? broadening your horizons, using options, using Forex, swing trading, core trading, etc. and so forth, guys, you need to do those things. If you do those things, then you can scale, right? Day trading is income producing, swing and core trading is wealth building. All right, so you don't start your account back over at $1,000. That's asinine and stupid, right? You build it up to 50, 100, 200 grand, use that as your trading base, okay, make more money with it, and then when any money extra you make after that, you put it into core trades and swing trades, and that's where you build your real wealth. Okay, I just wanted to be clear about that. But anyway, I'm kind of rambling a little bit today. Nonetheless, let's dig in. I took 10 trades this past week, guys. They were pretty decent trades, most of them. You'll notice there was a good trade on IBM that stopped out. We got back in IBM and it worked. The 84% rule is pretty powerful, guys. So far this year, since January 1st, it has applied 11 times. It's happened 11 times and 9 of them have worked. And to be clear, of the 2 times it didn't work, 1 of them was a very small loss. It was almost break even. So out of 11 trades, it's only actually stopped out 1 time. It's pretty unbelievable. I encourage you guys to back test it. Don't just blindly follow. Never blindly follow anybody. Just back test it because it's very, very, very powerful. So let's get to the computer, guys. I'm going to show you mostly slides this week because I didn't feel like cutting and editing 5 straight days of trading. Take 2 hours and cut it down into like 5 minutes and do it 5 times over would have probably taken me about 6 hours of editing. So this week, guys, I put them mainly in slides, but I will throw a little bit of the live trading in as well. All right, Jared Wesley of Live Traders, guys, let's get to it. Okay, guys, so like I said, I took 10 trades this week. I'm going to list them off right now, and then I'm going to go over them. I took IQ. I took Baidu. I took Apple twice, okay? I took MCHP, which was a very small position, maybe $100 risk. I might not even talk about it. It made $100. Then I took Tesla. I took Facebook. I took IBM twice, and I took Uber, okay? The 2 that applied to the 84% rule were Apple and IBM. I was supposed to get back into Facebook, but I did not. It really didn't matter because it finished the day break even. We'll talk about it. So the first thing we always do, guys, is we take a look at the daily chart first. So I put this back, guys. I went into the trade station here. I went back to February 3rd, okay? And you'll note this is the gap. So you can see the stock was gapping over this area right here. Okay, this little consolidation with room back to about 25 bucks. So we had room from like 23 to 25, about $2 to play with. I really like this. I like the pre-market chart on it. I liked everything about it. So let's go down to the 2-minute chart. Okay, actually, you know what? Let's go. No, 2 minutes fine. All right, so this is the trade I took on IQ. Wide range bar, narrow range bar, rip. We got in at $23.50 with a stop loss down here at like $23.20, and this thing just took off. I mean, this thing went over $1, okay? Over $1. So again, wide range bar, narrow range bar. If there was one negative on IQ, there's only one small negative, and that means bar number 2 was a little bit too big. Not much, just a little bit, but the reason I still liked it so much is because of the bottoming tail. This thing had a massive bottoming tail. So wide range bar, narrow range bar, rip, and both. That wide range bar was also on volume, and this is what it looked like, okay? So this is the play I took on IQ, all right? So there's your wide range bar. There's your narrow range bar. You can see my fill down here, $23.53 was my fill. Ultimately, I'm not out of the entire position right here. You can see in this picture, but you can see I made about $900 on IQ this day. Okay, and it was a nice play, right? It was about like I said, about a 30-cent stop loss, maybe a little less, 25-cent stop loss, and we got a little bit more than 2 to 1 out of this thing. Again, for the risk level, and it was $900. Textbook, guys, textbook. Note on the 15-minute gapping over this area right here, gapping over this area right here, okay? So that's trade number 1 for the week. That's trade number 1. Let's go to trade number 2. Trade number 2 was Baidu, B-I-D-U. Let's go to the daily chart real quick. You can see on Baidu, again, note the little pivot to the left right here. We're gapping above this pivot, which is like 128. Relatively smooth pullback means a relatively smooth bounce. So we had room back to 148. So I like the daily chart on this. It had plenty of room to go higher. Now our goal was to find an entry on this thing. So if you take a look at Baidu, guys, I got in Baidu right around 129.50. Now some of you are going, wait a second, Jared, there's no true 3-bar play there. Well, I agree with that. However, hold on, let's pull this back. You can see right in this area, all right, if you were to just erase that topping tail a little, right there is where we got in. See it right there, 129.45, 129.35, right there. Okay, right here, put a little line on it, right where that line is, okay? So we got in right there with a stop loss down here, and the stop loss was right around 128.50, okay? So 129.40-ish by 128.50-ish. Note, it ripped, it pulled back, and it ripped. Again, you could have added here if you wanted to. Now let me pull up the Baidu slide so you guys can see it. All right, blow it up, and there it is, okay? Notice the daily chart right there that I talked about. There's the entry at 129.47, the stop loss at 128.50. The only negative here, and I talked about this during the trading day when I called it, was simply that we had a little bit of a hiccup in the 130 area. See the pre-market? Well, we're getting in at 129.50, so we are above most of this. We're above most of this, okay? But we still had the 130 area to deal with. Thankfully for us, Baidu kept going and did a very good job for us. So Monday started off quite nice, right? You know, you end up making $1,800 give or take on Monday, and that's a good start to the week. That's about 3.5 to 1, okay? So now I'm just going to do this to make it easy, guys. We're going to go to Tuesday, all right? I'm trying to get through this quickly so this video doesn't last forever. We go to Tuesday, guys, and the first trade I took on Tuesday was Apple, okay? So let's go to the daily chart. Now, you can see right here, guys, Apple was gapping up over a topping tail with room back to about 326. Now, is this a great gap? No, it's just an okay gap on a very strong stock. So this wouldn't be some gap that you go, oh my gosh, that's a level 1 gap. It's incredible. It's not. It's just okay, but that doesn't mean you can't trade it. If you go to the 60-minute chart on Apple, you can see here the double bottom retest right here, right? The retest. And now we're gapping over this pivot right here. So that's what I liked about it. Gapping over this pivot after a pullback to support. So it should have bounced this day. So now on Apple, I really like this off the open. One of the things I liked about it was this engulfing bar right here. See where it's engulfing right there? Okay, 316 was the entry. We got in right at 316 with a stop loss down here at like 315, 314.90, something like that. Apple popped up and then completely stopped me out. Now, you could make an argument that this was a very aggressive trade. And you know what? It was a somewhat aggressive trade. Let me bring it up for you so you guys can see it. All right. It was a little bit, I don't know why it does that, guys. It was a little bit aggressive. I apologize for this over here. I don't know why it does that. It was a little bit aggressive. Okay. But you can see on the pre-market, guys, do you see the pre-market right there? Okay. We're getting over this pink line. The pink line was the resistance point. So I was using a combination of a 2-minute high with a pre-market breakout. But because it was so early, right around 9:33 in the morning, it definitely was an aggressive trade. Here's the crazy part. We almost got to 1-to-1. We almost got to 317. And as you guys know, at 1-to-1, I moved to break even. I would have gone to break even. We needed 14 more cents. So the reason I'm showing you this slide specifically is, what does my shirt say today, guys? It says trade your plan. Trade your plan. Guess what? I watched $519 plus $519 turn into minus, let me see, checking the spreadsheet, minus $524. This turned against me. It went from $519.50, you can see it right here, to minus $525. It's a $1,000 swing. Guess what? I followed the rules of my plan. Guys, even when your plan is wrong, your plan is right. Those of you who are married, you know what I'm talking about. Even when your spouse is wrong, she's right. Okay, you just don't know it. All right? So yes, it bit me here. If we went 14 more cents, it would have been great. We would have moved our stop to break even. It would have came all the way back and it would have been break even. All right? So that was the Apple trade. But here's the beauty. Can we say 84% time? 84% time. So guys, On the Apple, it gave me a full stop out. So that allows me to do what? Put the 84% rule into effect. Okay, there it is. Take a look. Okay, it's important. Take a look. Apple stopped. 84% rule is possible. Okay, that's possible. Now, I want to be clear, guys. I typed this. All right, I typed this at 9:44 in the morning. The second trade on Apple did not trigger till almost 10:30. We waited 45 minutes for this to trigger. And then I typed it in, 9:46, 2 minutes later, Apple 316 by 315, 84% rule play. Now, the reason I'm bringing this up, guys, okay, is because guess what? The second entry on Apple was not a good entry. There was no pattern here on Apple. I'm only doing this because I have back tested the 84% rule over 1,000 trades, and it works really, really well. So let me bring this down for a second, okay? See, you could have got in on a buy setup, on a double bottom retest. That would have been a good entry, right? Textbook entry. We got back in right here at 316. There's no pattern here at 316. You know what the pattern is? The 84% rule, okay? So reason I'm making such a big stink and big fuss about this is you guys need to back test this first. Don't blindly do it because I said it works. Back test it with your own trades. Okay? So we got back in at $316. Okay? Where's that one at? Where's our Apple at? Okay? That's not the right one. My apologies. There we are. Okay? We got back in, and guess what Apple did? It hit our $318 target. All right. And I ended up making pretty good money on this thing. I ended up making about $400 or $500 net. Remember, after I lost $525, I ended up making $500 on Apple. Okay. So the 84% rule strikes again. Okay. It strikes again. All right. So the next trade, guys, is on Tesla. Let me get the right day in here for you guys. So Tesla, guys, was on Wednesday. A lot of you guys have been talking about Tesla and going crazy about Tesla. Look, let's be honest about something here. That daily chart is climactic. End of discussion. You know it's bad when you're going out somewhere and people at the table next to you at a restaurant are talking about Tesla. You know it's bad when your Uber driver is asking you about Tesla. Okay? That's when you know it's way overbought. Anyway, Tesla puts in a wide range green bar on massive volume, then gaps up the next day. Okay, it's over. The move is over right there. And then the next day it gaps down. This is the day we traded Tesla. Okay, this is the day we traded Tesla. Okay, so our job was to say, wow, this stock is climactic. Erase the name brand off of it. I don't care what the name is. It's climactic. So we were looking to short Tesla on this day. So what do we get? Oh, the heavens opened up for us on this. And they gave us a beautiful, truly, truly beautiful sell setup, 2-minute sell setup. Higher low, higher low, higher low, engulfing red bar right here, narrow range little resting bar right there. The entry on this was 820.50. All right, see the line I'm drawing? 820.50. I got filled at 820.25. Our stop loss was 850. So yeah, we had a $30 stop loss. But guess what? Tesla dropped $110. $110, and this is what it looks like on Tesla, guys. Let me bring this up real quick. Look at it. There's the line in the sand that I was talking about, right? There's that resistance line. There's the sell setup. It had a $30 stop, so I only got 20 shares of this thing, guys, and it just tanked. I mean, this thing did really well. It dropped, pop, drop, pop, drop. It was a perfect downtrend using a daily climactic pattern. So I used the daily as my bias and the 2-minute chart as my entry pattern. Okay, daily bias, drill down to find an entry, and that's what the 2-minute was here. Okay, you can see my entry there at 820.25. Our target on this was somewhere around like 760 or somewhere in that range on this, and it easily got there. You can see it didn't even take that long to get there. So, right, so we banked another $900 to $1,000 on Tesla. Okay, and then we move on to the next day, which was Facebook. And this was, honestly, this was the worst day of the week, and it wasn't really that bad. So this is Facebook, and you guys will see another nice pattern, but it didn't fully materialize, okay? So here's the 5-minute, guys.
5-minute Facebook right here. Okay, I draw a little circle around it there. So Facebook opened up and put in a red bar. That red bar was engulfed by a green bar, wide range engulfing green bar, followed by what? A narrow range resting bar. What do we have? We actually have a 3-bar play here. Technically, it's a super play. Some of you don't know what that is. I'm not going to explain it. If you haven't taken professional trading strategies, that's where that play is. So we got in right around 210.90, right above that area. Now, the one negative here, there was one negative. This pivot to the left. All right, that was the negative, this pivot to the left. But at the time we got in, Tesla was showing, Facebook, my apologies, Facebook was showing such incredible relative strength, I thought we got to get in this thing. We just have to get in. All right, so we took it. It popped up a little bit, not much, and then it just rolled over and stopped out. That's it. Very simple. It rolled over and stopped out. Let me show it to you. Okay. So this is where we got in, and you can see that pivot high to the left. That's the pivot high to the left. This thing right there is where we got in, 210.89 by 210.25, popped up like 20 cents and then rolled over and stopped me back out. Okay? So I ended up losing $250 on this. Now, here's the rub. I should have lost about $500 or $600. I broke my trading plan on this. Yes, it helped me, but guys, listen to me. Please listen to this. Don't break your plan. This is one of those things, do as I say, not as I do. I was an idiot. I was a bonehead for breaking my plan on this. Okay? I should have followed the rules. Sure, it saved me some money. But at the end of the month, you're going to cost yourself money by breaking your plan. Trust me, your intuition is not as good as you think it is. It's not. Your plan always wins. Happy wife, happy life. Don't argue with your wife. Your wife is right. Your wife always wins. When she's happy, you're happy. Guess what, guys? When you follow your plan, you are happy. Maybe not in the moment, but at the end of the month, the end of the year. Okay? You want to stay married? Listen to your wife. Guess what? You want to stay a trader? You want to make a living at this? Follow your plan. Trust me when I say it. So Tesla stopped me out. I didn't take a big hit on it. It re-triggered. The entry re-triggered, and I did not take it. Again, I broke my plan. The positive is I got away with it because Tesla didn't work or stop out. Actually, Tesla finished. Sorry, guys, I keep saying Tesla. Facebook. Facebook finished today roughly break even. Roughly, a little bit under break even. So got away with it. But don't do it. Next, guys, on to the next day, which is Friday. Okay? So let's take a look at the two trades we took on Friday. They were IBM and Uber. All right, now take a look at IBM here, guys. Now, the daily chart on IBM is climactic, very similar to Tesla, right? 1, 2, 3, 4 days up, 5 days up with what? A huge wide range bar on volume. That's the blow off top. And then you get the gap up the next day. So I said, hey, and I put it on social media. I put it on StockTwits. I put it in the chat room. Guys, IBM, look to short it. It's going to go lower today. Well, that's the daily. It looks good. We ultimately got in right here, okay? It was really like a 1 minute breakdown, 2 minute breakdown right there, okay? If I bring up the 2 minute chart, you see a little better right here, okay? Right there. We got in right there, right around 154, okay? $154, give or take, with a stop loss at 154.65. Guess what? It triggered us in and stopped me out right here. See it? Stopped us out by 20 cents, 15 cents, something like that. Nah, actually more than that, about 25 cents, okay? I took a full loss on this, okay? I lost about $500 on IBM. Let's bring it up, okay? Where is it? IBM, where are you at? There it is. I apologize, guys. I'm doing this on the fly. I'm not editing like everybody else. Oh, edit your videos better. All right, there's the pre-market low right there, 154.20, give or take. So I said, man, if we can get under the pre-market, we're going to do pretty well on this thing. Got a 2 minute entry. You can see it right here. There's our 2 minute breakdown. 154. I got in 154.03. Stop loss is above here. And I'm thinking, as soon as we break 154, we're golden. Guess what? IBM went down to 153.88 and came right back against us. Went down to 153.88 and came right back against us. I actually lost $500, not $525 on this. Okay? So that is the losing trade. But guess what happened? It's a full stop out. IBM re-triggered right here. See it right there? 84% rule, IBM re-triggered, okay? And after IBM re-triggered, what happened? It just went lower and lower and lower. Just barely missed our 2-to-1 target here and then finished the day up about 1R, 1.2R, okay? So this entry, to be very specific and clear, this is not a good entry. But the 84% rule strikes again. Backtest it, guys. Isn't it amazing? We look at the re-entry on Apple, not a great pattern. We look at the re-entry on IBM, not a great pattern. Both of them worked. I'm telling you how powerful the 84% rule. So we get back into IBM, guys. Here's what it looked like. I re-entered IBM. You can see it up here in the top left. Okay, $387 I was up. This is when it was at 153.60. Went all the way down to 152.90. 152.90. I ended up getting out right around 153, somewhere around there, 153.20, 153 range, something like that. Okay, and you can see I re-entered over here. Was it a great re-entry? No, but the 84% rule doesn't lie. Over 1,000 trades. You're going to bat 80 to 90% on that second trade. Okay. And guys, I don't want to hear about people saying, well, why don't you just do the 84% rule? Why don't you just skip the first trade and take the second trade? It's not realistic. It's like paper trading. How do you skip the first trade? Seriously, how do you do that? Meaning, the first trade makes you a lot of money most of the time. But when it doesn't work, you get back in them. Okay? And also, you can't just say, I'm going to skip this trade, because you'll end up acting like you're taking more trades than you really are. And then the last trade of the week that I took, guys, was Uber. And this ended up being a really nice 5-minute, 2-minute, 5-minute buy setup, guys. This was a really nice 2-minute, 5-minute buy setup. So check out the gap on Uber. One of the best gaps of the week. Look, wide range red bar, narrow range red bar. We're gapping over the pivot, over both red bars with room back to at least $43. So again, always start with the daily, top-down approach. Start with the daily, drill down to the lower time. So I really like the daily chart on Uber, okay? 113 million shares, guys. Guess what? That's institutional money. That's not mom and pop money. That's institutional money. So what do? Drill down to a 2-minute and a 5-minute. Wow. Lower high, lower high, lower high, lower high. 50% retracement from the top to the bottom, 50%. Engulfing bar, little pullback. Man, we're in this thing at 39.50. Let's take a look at the 5. All right, there it is. Now, guys, where is that support again? Where is that minor price support? Level 2 price support. I'll put a line on it. Right at 39 bucks. This thing gapped up over red bars, pulls right back to support. Right back to support. Leaves multiple bottoming tails, pops, pulls back, and then rips. You had an opportunity to add to this at $40. This is what it looks like. Boom. How about them apples? There's the daily gap. There's the buy setup on the 5. And there's our $950 some. Okay, $950 some. So just a quick recap, guys. On IQ, I ended up making about $850 on IQ. On Baidu, I ended up making about $850 on Baidu. That's about $1,700 on Monday. Then on Tuesday, I lost $500 on Apple, but then I made $900 to $1,000 on the second trade. So I ended up netting out about $400 to $500 on that day. It's about $2,250 for the week. And then I also, on Wednesday, I took MCHP and Tesla. MCHP I didn't show you because I only got 100 shares of it. If I had gotten 500 or 600 shares, I would have showed it to you. I made $100 on it. It's $2,350. Tesla that day, guys, we had a $900 to $1,000 trade. Remember the sell setup on Tesla. That puts us at like 3,300, something like that for the week. And then what happened on Facebook on Thursday, a little bit of a pullback, $250 pullback. So I'm back to 3,100 for the week. And then Friday comes in and we go boom, boom, right? We lose on IBM on Friday, but then we win on the second trade. We net about $400. Now I'm up to $3,500. And then the Uber trade made about $900. So all in all, just over $4,000 this week after all fees and everything. I think $4,200 or $4,300. Guys, that's pretty good. That's about 8 to 1 on your money. All right. Like I said, I'm looking for 1% per day. That means about 20% per month. For those of you out there who don't think that that's good, check yourself. Okay, 200 to 300% per year. Do that for 2 or 3 years in a row, and you have a massive account. You're living a really good life at $200,000 to $300,000 a year. And if you want to do higher risk, you can make $300,000, $400,000, $500,000 a year. Okay, but at that point, once you get to the 300 to 500 point, you either need a basket of stocks or you need to start core trading a little bit. All right. So that's this week's review, guys. I tried to keep it short. I really wanted to put in some of the live video this week. It's just the editing it just takes forever. Okay, so I don't care about the people out there go, oh yeah, Jared, it's easy to show charts after the fact. All right, do this every day live in the chat room. If you want to see it live, come into the chat room. $1 for 30 days. One stinking dollar. So if you're going to call me out, spend $1. Also, I do this every week and I put up the live fills, okay? So yes, all of these were done live in the chat room, guys. I took pictures of them. You can see the account number, all that other good stuff. Next week, I'll get back to putting more of the live trades in. And I'm just being honest. I just didn't feel like editing 5 days and 10 trades worth of video because it would have taken me 5 to 10 hours. All right, it's just that simple. All right, so good week, guys. Solid week. I hope you guys enjoyed this review. I'm not going to go over every single trade every week. Just got a lot of emails of people saying, can you go over every trade? I just want to see what a professional trader's week looks like. So I did. All right, we took 10 trades ultimately. 2 of them stopped out. All right, technically 3, but one of them was a very small loss. Okay, the Facebook. And then we got back in them. So realistically, when you think about it, both stop outs, we got back in and made money off of. So it ended up being a pretty good week, a very efficient week on 10 trades. All right, the expectancy this week was about 0.8, which is phenomenal. Okay, 0.3 is good. 0.8 is ridiculous. All right, so I'm Jared Wesley of Live Traders, guys. Remember, you can get a $1 30-day trial by clicking the link in the description. All right, Jared Wesley, guys, have a good one. I'll see you again next week.
To get more great educational content, subscribe to the Live Traders YouTube channel. This way you'll get email alerts every time I upload a new video.